Good morning, good afternoon, good evening, wherever you are joining us from. Thank you for choosing to spend the next hour with us as we delve into everything Global Wealth Group. Joining me tonight, we have the team from simple.Capital. Welcome, gentlemen. And we also have our chairman, Willem van der Post, and our CEO and founder, Scott Picken, who will be joining us. As always, we love to know where you're joining from as a global community, so please do feel free to pop into our chat box where you are signing in from today. And also just to draw your attention to the Q&A box, we please ask you to pop any questions that you have in the Q&A box so that our panelists and moderators can actually find them easily, and we can get as many of those answered as possibly throughout the evening. So with that, I'm going to hand over to Tim Willis from simple.Capital. Welcome, Tim.
Great, thank you, Lee, and good evening to everyone. And yeah, excited to be here. So, firstly, thank you for joining us, and I'll be walking through the investment opportunity tonight. First of all, I wanted to introduce myself, and then I'll give each of the panelists a quick opportunity to talk about their own profiles as well, because I'm sure that'll be interesting. So, as Lee said, my name's Tim Willis. I'm the CEO at simple.Capital. Before founding simple.Capital, I was previously the COO at Aerobotics, where I was which is an agri-tech startup based in Cape Town. And I was part of the team there that led the $17 million funding round into the business, which had a lead investor of Naspers Foundry. Previous to that, I was head of central operations at Uber in sub-Saharan Africa. So took that product onto the continent. I'm a CA and CFA, having done my training at Deloitte, and I've worked in South Africa, San Francisco, and Amsterdam, and have a deep passion for investing in early stage tech companies. And so it's very fortunate because my passion and my work aligns very closely. simple.Capital has partnered with the Global Wealth Group to support the company with a successful capital raise. And I think it's important to note that we only partner with companies where we plan to become investors too. So we will be joining you on this investment journey. And I think, we've worked with a number of startups or tech startups or tech companies over the last, year or so. And some of them are household names, which you may be familiar with, such as Sweep South and Flex Club. And as I said, we always like to partner and become investors as well. So we will be joining you on this path. My job this evening is to ask some of the hard questions that hopefully are on your mind as well. And at the end, we'll have an opportunity for Q&A. There'll be quite a bit of time for that. So please feel free to drop your questions into the box. We might answer them during the evening, but we'll try and get to them at the end. And then I'll be asking some questions of Scott and Willem as well as Blake. So without any sort of further introductions from my side, Scott, I know most of the folks on the call know you probably very well, but maybe I'll just hand over to you for a quick introduction to get us started.
Perfect. No, well, thanks very much, Tim. And we're extremely excited about the partnership with simple.Capital. I think the 30-second elevator pitch is I did my dissertation on how tech was going to change the property and construction industry in 1998. I did my dissertation in London in 2001 on the same topic. And so unfortunately, I'm fortunately or unfortunately a bit of a one-trick pony who spent the last 2 decades trying to figure out how to digitize this industry. And in the last 17 years, been helping people invest internationally in property between England, Australia, America, South Africa, and more recently, Europe. And really, we started Wealth Migrate as a concept over 10 years ago. We've now got members in 170 countries. And I think what's quite exciting is that we're getting closer and closer to the vision of allowing anyone, anywhere to be able to invest from any amount. And what I'm truly passionate about is empowering everybody to be able to invest like the top 1%. So that's the elevator.
Great. Thanks so much, Scott. And as I said, I've been super excited to partner with you guys as well, and just amazed at the determination and hustle of building the business and what we've been able to do in the last couple of weeks, just as a quick start. We are very fortunate. Global Wealth Group and simple.Capital share the same chairman, Willem van der Post. So maybe, Willem, I can just hand over to you now and you can give a quick intro about yourself as well.
Tim on online. Nice to be back, this time in a dual capacity, vis-a-vis both from a Simple Capital and a Global Wealth Group perspective. I think most people on this call I've been introduced to before. I'm a finance professional in background, involved in early stage technology deployment and venturing, and I'm really looking forward to share some of the content with you this evening.
Thanks, Willem. And it's great to be able to collaborate on this project as well. I mean, it's very exciting. Finally, we have Blake Musgrove, who's our Simple Capital Chief Investment Officer, on the call as well. And he'll be taking us through some of the finer details on the investment opportunity and helping us to keep it simple. So Blake, over to you.
Thanks for the introduction, Tim. Good evening, everyone. Quick background, CA and CFA by formal training. I've spent 8 years at Investec, 5 of those in London with Investec Asset Management in their multi-asset investment team. And I suppose have over 10 years experience in taking calculated investment risk. I head up the investment strategy at Simple Capital and also the advisory business. So looking forward to discussing the deal at hand and the Global Wealth Group business tonight.
Thanks, Blake. And if you can just hang on for 2 seconds, I've got a question to get us started this evening. But I think what's really important is to better understand the alternative assets and the focus that investors are placing on them at the moment. I mean, there are numerous alternative assets, everything from fine art to pork belly futures. Can you give us like a little bit more detail on why alternative assets as an asset class compared to some of the others that are out there?
Sure. So the alternative asset space is obviously very broad, as you mentioned. I think to zone in specifically on private real estate, where GWG has had particular prowess and a strong track record. You know, private real estate generates attractive risk-adjusted returns. So what return are you getting per unit of your risk? And so an IRR of nearly 14% in 2020 is super impressive, and that is delivered in real estate both through income generation as well as cap rate compression through basically an increase in the market value of your underlying property. So key to look at risk-adjusted returns. Correlation amongst asset classes is increasing. And I suppose the opportunity to lower your portfolio risk through diversification and through generating purely uncorrelated returns, largely to listed equity, is an attractive proposition. So private real estate has very low correlation to your typical listed equity asset class, whereas interestingly, REITs, which are the listed real estate option, actually have a positive correlation to listed equity. So by going in deal by deal into private real estate, you're lowering your risk profile of your portfolio and increasing your diversification. Enhancing your yield, I think this is key in a world that is completely yield starved. Everyone out there is hunting for yield. So generating circa 8% in dollars is super attractive. And this is in the context of, you know, you can go to US government bonds. The 10-year US government bond yield is 1.6%. Or you go 20 years out, US 20-year, you're getting 2.1%. Even if you go to riskier asset classes, you know, in high yield credit, I mean, the credit spread is at all-time lows. And if you go to Europe, you're actually getting negative rates. So an 8% return yield-wise in dollars is super attractive in this environment. We obviously know that we're in a very persistent low interest rate environment. And this is obviously supportive of the real estate returns and real estate asset class. And then you say, okay, well, I can have my balanced fund. I can have my 60% equity, 40% bonds. Why do I need an allocation to alternative assets and to private assets? Well, I think it's clear that there's an illiquidity premium that you earn for basically locking your money up for a 3 to 7 year period versus just having it in a liquid ETF. And so that illiquidity premium is what you earn for entering the private asset class versus the public space.
Thanks, Blake. Yeah, and I think that's really about what we're chatting about tonight is how do we access this, and how has Global Wealth Group made this more accessible to individuals? Scott, I wanted to change gears and flip to you maybe a little bit. You mentioned in your introduction a bit the mission of Global Wealth Group, so I wanted to touch on that again, and maybe just as a two-part question. Why did you choose as the first alternative asset property for Global Wealth Group?
Look, I think there's a couple of things. The first one, 49% of the world's wealth is held in property. You know, the saying that's out there, he who owns the land is king, has been around for centuries. It's been the greatest store of wealth for centuries. And so for us, it was the common sense way to get started. The other thing was that from our own experience, I've always had a love and affinity for property and technology and wanting to marry the two together. So we built the platform originally and ostensibly to be able to help people invest from a property perspective. But what we actually realized was that we built a book building system which allowed any asset in the alternative space to be on the platform. And what I realized, and to be fair, it was the team that really came up with this far more than myself, was that if you truly want to diversify, you can't only be in property, you need to be in other alternative asset classes. And so we decided to make the platform more accessible, you know, to any alternative asset, to anyone, anywhere, as the missions got up there. But property is still very much part of our, you know, majority. I mean, it's more than 80% of our entire portfolio. The last thing I would say, which I found very interesting, Tim, is that I would consider myself an educated person. You know, I've got all the degrees locally and internationally, et cetera, et cetera. But what I've found fascinating over the last couple of years is different types of alternative investments that the truly wealthy invest in that I haven't even learned about, let alone invested in. And what's becoming more and more interesting to me is as people get access to those investments, that effectively the democratization of those investments, then they can start to experience the returns that the truly wealthy are getting, that they've never had access to. But quite frankly, and I include myself here, there were types of investments in the alternative space that I didn't even know existed. And, you know, I'd go as far as to keep it really simple. Most people have been taught to go out and buy a house or an apartment, but actually the real money in property is made in commercial. And most people they sort of understand that, but they don't even know how to get started. It's just an example of that alternative space.
Yeah, and I mean, I think that's super important. And we've spent a bit of time over the last couple of days and weeks sort of talking about the traditional model versus the new model. So maybe can you give like a bit of an indication around sort of how have people traditionally invested in things like REITs or, you know, primary investments through, you know, purchasing your own house, etc. And really, I suppose that's where Global Wealth Group's playing, is really optimizing that experience. So maybe if we can just start on like, what does a traditional value chain look like? And then we'll switch into sort of how is Global Wealth Group, I suppose, disrupting that space.
Perfect. So look, as an investor, you've effectively got two options. The one is that you can go out and buy a property. And if you take, you know, the person wanting to buy the property and the actual investment, you know, you would basically, if you were trying to go in the direct space, there would be 16 different middlemen. This particular option that's up on the board now is the second one. So sorry, let's just stay on the slide. Let's stay here, Richard, on the slide. So, okay, yeah, let's stay on the slide. So this is the kind of the traditional way of doing it. Now, whether this is a local investment or an offshore investment, it's basically Jill or Joe Soap and they're investing in a property. There's on average 16 different middlemen between themselves and their investment. There's very high minimums. You know, generally you're putting down 10, 20, sometimes 40, 50% as a deposit. It makes it highly inaccessible. It's very difficult for diversification. You've got to put in structures and bank accounts and everything. The investment cycles are a long time. And quite frankly, the hassles of managing the property are well beyond what most people's expectations are. I know certainly from my own experience, by the time that you take all the complexity and the middlemen and the fees involved, the gross returns minus the fees, the net returns, you know, often equate somewhere in the region of kind of 3 to 4%. If we go to the other alternative, it's to go through the secondary market or the listed sector. And that's where you're going along to your financial advisor, they're going to a financial institution, they're then going through a sort of an investment vehicle, and they're investing offshore. Once again, there's multiple layers in fees all the way through. So not only does that dilute the returns, but it dramatically decreases the transparency. In fact, you've got no idea what you're actually investing in, what the underlying assets are. And often what they tend to do is they rob Peter to pay Paul. So you can have one good performing asset, one bad performing asset. They rob Peter to pay Paul, which is why the returns become diluted. The other problem is that the secondary market is very volatile, because it's got a higher than 70%, and to Blake's point earlier, higher than 70% correlation to the stock market. So it tends to go up and down based on the sentiment of the stock market versus the value of the asset and the income that the asset's actually earning. And that really is a major challenge for people that want diversification. And so we would sit back, you and I and everyone else that's on this call, and there was no way for people to participate actively in the alternative space, because they didn't have the money, they didn't have the time, they didn't have the knowledge or the access to be able to participate. And therefore we had to go one of these two routes, which, you know, the ultra wealthy have tended to do, but the rest of us have not. And it's one of the reasons why we've had such challenges in terms of the widening of the wealth gap, because different people are invested in different assets.
Yes. And Scott, maybe just the size of each of those markets. I know we spoke about it this morning, but I mean, it's huge, like how big these opportunities are.
Well, yeah, I mean, according to research that came out last month from Savills, you're looking at about 320 something trillion in the real estate space and 21.1 trillion in the alternative investment space. And it's astounding, you know, when one considers the size of this market. And I tend to joke with people, but other than an industry I won't mention, it's the oldest industry in the world, and yet one of the most unsophisticated industries in terms of the way that it's distributed, accessibility, fees, cost, hassle. And that's why it's so ripe for innovation, because again, if you come up to this problem summary, you know, basically fewer than 13% of people on this planet actually have access to residential property, and less than 1% of people on the planet have access to commercial real estate and other alternatives. And therefore, you know, again, as per what you can see here, they've only traditionally, even those that have access, have only traditionally had primary market access through direct investment, which we explained, or secondary market access through a listed investment vehicle. And yet the top 1%, the truly wealthy, are investing in other assets in a different way. And up until, you know, we came along, and other platforms like ourselves, they were excluded.
And I think that's a good segue into exactly how are you disrupting this space. You talk about sophistication, you talk about like changing the you know, this, I suppose, very old fashioned way of doing things. What's the Global Wealth Group answer to this?
Well, the metaphor I like to use is, because we all understand it, is Uber. So before Uber came along, the taxi industry was very old and archaic. And, you know, if I was to arrive at Heathrow in London and I would phone a taxi owners association, and they would phone a taxi driver who would finally, you know, come and pick me up probably 2 hours later. And, you know, if I didn't know my way around London, he would take me on a very long road. It would be costly. It would be inefficient. It was, you know, anyone that's ever caught a taxi would know that it was a hell of a hassle. And then what Uber did was it effectively cut out all the middlemen. It cut the cost, and it dramatically increased the trust, the transparency, and the accessibility. I mean, suddenly with a smartphone, we all had access to our own private driver. We've done pretty much exactly the same thing. So we've got the individual, the investor, who wants to invest in an offshore property or other alternative investments, and we put them directly in contact, cutting out all the middlemen. So they get access directly to primary market investments from as little as $100. There's no unnecessary intermediaries. You're literally dealing directly with the partners who are actually doing the investment. There's complete transparency. So again, if you look at costs or risk, often it's kind of hidden on page 38 of the PPM, and it's in the small print that they really don't want you to see. A platform and technology traditionally brings transparency to the process. It's simple, quick, and easy. You know, when you look at our web platform and the digital wallets, if you want me to do a demo just now, I can. But, you know, I can literally invest in England, Australia, America, Europe in under 30 seconds once I've, you know, funded my wallet. And the other thing that's interesting is that you still need, a lot of people want to have the comfort of knowing that the deals have been curated or vetted. And so we've got quite a sophisticated world-class due diligence process. And when you're investing, you're not only investing your money, but you're investing alongside partners with 10, 20, 30, 40-year track records. And so one of the fastest ways to be successful is to copy successful people. I go further than that and say one of the fastest ways to be successful is partner with successful people. And that's what, you know, you're doing exactly in this investment. And then the final thing, I often use my brother here as an analogy, but him and I bought a whole bunch of properties around South Africa and around the rest of the world. And he's an anesthetist, a doctor, and he just literally got so disappointed and disillusioned with broken toilets and management agents and hassle that he sold all the property and he wanted nothing to do with it. By doing it through a platform, there's zero hassle. You don't have to worry about structures. You don't have to worry about bank accounts. You don't have to worry about management or maintenance or estate agents or management agents or anything like that. It's all managed for you online and simple and safe.
Yeah, great. Thanks. And I mean, obviously from my Uber days, I know that there's obviously two sides to the marketplace. One is in your case, investors. In our case, it was riders. And then obviously the supply side, which we had as drivers and you have as investments. So I want to drill into both sides of the marketplace and just talk a bit about strategy on how you balance that and how you bring in folks. So maybe if we can just chat a little bit about distribution channels on the on the demand side. So how do you go out and acquire investors? I know there's a couple of different distribution brands that you have. So just wanted to talk through that and learn a little bit more about the investor side of the marketplace, and then dive into the investment side.
Great. So if you look at the slide that we've got up at the top there, you've got own distribution, and that's our own marketplace. So we've got Wealth Migrate, that is the mid-tier investor. It's $100 through to $100,000. And then we've got Private Wealth Global that effectively is like the private banking. It's the $100,000 plus. It's for high net worth investors, ultra high net worth investors and institutions. Now, with regards to that strategy, we targeted through organic growth and digital marketing. We targeted through referrals and affiliate fees and effectively affiliate channels that have distribution networks. And we do it through partnerships. So that basically is how we grow the distribution. It's primarily a digital marketing and education-based focus. On the other side of the fence, we've got partner distribution. And that's where we've got a number of partners where we go out and we've got genre-based partners and geographic-based partners and or financial institutions or platform. In simple terms, we call them demand partners. So what that means is that we're about to launch a platform at the moment called Sharia Wealth. There are only 1% of financial products around the world are Sharia compliant, and yet there's massive populations. In England, there's 5 million. In Germany, there's 7 million people that are looking for Sharia compliant products. And so they would plug into our system. We call it a blue label. They would have a fully functioning system where they are provided with everything from the compliance to the platform to the wallets. But it's the same supply, it's curated supply. So that's a genre-based. We've also got geography-based. So right now we're in the process of launching Wealth India. We've already got China up and running. We're launching Wealth India. And just as today, we had a meeting with Magic Bricks as an example. Now, Magic Bricks is like the Prop 24 of South Africa. It's the biggest, property portal in India. And in the same way, you go and you find a partner on the ground and you find localization where they've already got distribution, infrastructure, trust, but we can provide them with a blue label service to plug into their system and automatically unlock for them potential, because they've got clients in India that are looking to invest offshore. And we've got an end-to-end solution for their clients, adding value to their clients, but also to them because they're building annuity income within a white label system. The last thing I would say is that for financial companies, so be they financial planners, be they institutionals, institutional, even sort of banking level. You know, we were having a conversation with MedTech last year where they didn't want to go after their ultra high net worths, but their mid-tier market, the people that are kind of $10,000 to say $150,000. They call them the aspiring aspirationals. We can provide them with a solution, and we call that a white label solution where we can, again, plug and play into their brand. So I think to answer your question simply, Tim, there's really two distribution strategies. One is through organic growth of our own marketplaces, and second is through what we call venture building, and that's through partnerships with companies that already have their own brands, already have their own trust, and already have their own distribution, but are looking for a digital, global, compliant solution.
Great. That makes a lot of sense. And I have, if I dive into the investment side, I kind of have two questions there. So the first one is, how, like, can anybody put up a deal, or what's the curation process if it is a curated list? So sort of just talk us through how sourcing deals, and then what process I suppose you follow to put them onto the marketplace. And then second is, with the white label partners, I wasn't 100% clear on this. Do they get access to the deals that you've already put on the marketplace, or do they bring their own deals and just use the tech platform? So if you can just answer those, that would be great.
Perfect. So the first question is fairly simple. When someone's investing internationally and looking to diversify, they don't need a huge amount of variety. They want quality over quantity. So we're not looking to have thousands of partners with thousands of deals. We're not looking to have a Prop 24 or a Magic Bricks. That's not our desire. Our desire is to have 20 quality curated partners that are world-class with decades worth of experience, billions of dollars of track record. And it's interesting because once you've done the due diligence on the partner once, you don't have to do it again. And they look to bring 3 to 4 deals a year. That's traditionally how these companies work. That means that you're getting somewhere in the region of 50 to 60 deals per year, which is 1 a week. That is ample diversification for our investors. And so from a supply side and a curatorship side, it's not about the quantity, but rather about the quality. And then what we're looking to do is we do a lot of work in terms of geographic. I was talking with Rion, our Chief Investment Officer, today around the research we do into the economics, the GDP growth, the population growth, and we go after specific sectors in specific geographies, because I, as an investor, you as an investor, Tim, want to be diversified across assets, across countries, across currencies, and most importantly, across partners as well. You don't want all your eggs in one basket.
No, that makes a lot of sense. And just on the second part with the white labeled products, are they accessing those sort of 60 investments a year, or do they bring their own investments?
So the option from a tech perspective is it's both. We've got two types of partners. Some partners want to bring their own deals, and then it's got to be vetted and go through the same due diligence process, particularly if they want to put it on our marketplace and or use our compliance. But they are completely in control of their own shop. I call it a shop or a store, if you want to call it that. So if, for example, I tend to joke, but they hate Joe Biden and they want nothing to do with America for their clients, they can literally block any deals that are from America, and they can only put their deals into the shop. So what's really important for the white label partners that we've learned the hard way, by the way, is that they want to have their own branded solution. They don't want to send it to someone else's marketplace. And two, they want to be in control of what's in their shop. However, most of them don't have the time, energy, effort, or knowledge to go out to England, Australia, America, Europe, and find curated supply and quality partners. And so they're more than happy to have curated supply in their shop.
Yeah, that makes a lot of sense. So let's just carry on. I had a question around the different distribution brands that you have. So you've obviously kind of created two discrete experiences. I just wanted to drill into that for two seconds and just find out, like, what was this? Why do you feel like the individuals need different brands and experiences, and does that differ from a fees point of view as well?
Yeah, so again, the simple metaphor I like to use is when we all fly on the same airplane, you've got first class and you've got economy class. And although we're on the same airplane, the same infrastructure, the same costs, the same pilot, there's a far different level of service or value that you're getting. So what we found over the years, Tim, is that we've had investors invest $1 million and we've had investors invest $100. And although they're investing through the same infrastructure in the same deal, we find that they've got different needs. And particularly on the private wealth global side, they want a far more private banking human experience. And for that, that's what they expect. That's what they're used to. Whereas on the Wealth Migrate side, when someone's investing $100 or $1,000, $10,000, it's much more scalable. You're looking at providing a really scalable digital solution that's less human orientated. Now, from a cost perspective, if someone's investing $100,000 plus, the proportion of cost in terms of the overall infrastructure to own the deal is far less. And so we charge 1% fees up front for private wealth global, whereas on Wealth Migrate, we charge 3%. And it's just a proportion, it's completely transparent. It's a proportion of the fee that is effectively put towards owning the asset. And so we do incentivize people if they're looking to invest larger sums of money, because proportionately, they will get a slightly higher return, but it's a cost of doing the transaction.
Cool. And then I just saw there on that slide that you also charge on the investment side. So there's I think I saw a 3% fee to deals that come onto the platform. Is that correct?
Correct. So the standard industry around the world is about 3%. Some markets try and charge 5, 7, some even as high as 10%. We've got our model very clear and very transparent. And I learned this from Airbnb. It's a flat 3%. And so investors know exactly what they are investing in. They know what the costs are. Equally, sorry, that's on the demand side. Equally on the supply side, our supply partners know exactly what it is. It's a flat 3%. That's what it is. And what they love about it is that it's very clean and easy. There's no, waterfalls and carries and all the complications that have been involved in traditional private equity deals. It's much more, and I'm going to use the Airbnb Uber model, where it's a transaction, there's a flat transaction fee, everyone knows what it is, it's completely transparent and easy to work out.
Yep, I think that makes a lot of sense. It's one of the reasons why we named our business simple.Capital, is to try and make things a little bit simpler in a very complex space. I think that probably the one slide everybody's been waiting for is to get a bit more detail on the traction. What does it look like in terms of growth and how we've been going the last couple of years?
Perfect. So this one's an interesting one, because if you compare us to some of our local partners in terms of around the world, we are smaller than some of the local platforms. So there are platforms in America that are bigger by volume or by number of investors. But what we've focused on is by providing a global solution right from the beginning. So everything from the tech stack to the compliance has been built with the end in mind from a global solution. So at the moment, we've got just short of 30,000 members. We've got 1,480 active investors. So that's people that are fully compliant with their wallets and investing in deals. In the last 3 years, we've had $11.5 million invested through the platform. The investment target return is about 14% IRR. The cash on cash, as Blake already alluded to, was just short of 8%. It was 7.99 to be exact. And then one of the things that I find fascinating is that we've got members now in 170 countries. And so we've only ever spent marketing money in South Africa and China. And yet in 168 countries, we've had members sign up and join the platform through social media effectively.
Yes. No, I mean, these are great numbers. And I think Richard has another slide for us with a few more details on the unit economics. And I'm hoping that we can jump into those as well, because I think it's great to just see, like, where are we today versus what's our target in the future? And I suppose just get your thoughts on how we're going to get there.
Perfect. So if you look at this unit economics, and really the credit here needs to be attributed to Willem, because when Willem joined the board a year ago, he said, look, the most important thing is to create scalable operating profit. So what are your unit economics? And if you're doing one transaction, what's the scalable profit that you're making on that transaction? And then ultimately, how do you scale that in terms of the process? So we had to work backwards. So rather than just working in round numbers, we went back to the unit economics. What's important here is that our customer acquisition cost is $251. Now, to be very clear, there's different metrics because we've got a customer acquisition cost for members. We've got a customer acquisition cost. This customer acquisition cost is for an investor, someone who's physically investing in the platform, in the deal. Now, if you look at how many new investors we had in the last, this year, it's been 117. Now, it's quite exciting actually, because this was when the minimum was $1,000 per month. In the last 3 weeks, so the month of October, we've dropped it to $100 minimum, and we've had 26 new investors just in the last month. So there's a massive correlation between new investors joining and dropping the minimum investments down. If you look at the transactions per investor, we've got a 42% reinvestment rate, which basically means that if you look at it on average, someone's doing 0.6 of investment per year. Now, again, if the minimum investment's $10,000 and Jill or Joe Soap invest their first time $10,000, and just to keep it simple, they get a 10% return. That's $1,000. They've got to save money again to get to $9,000 to do another investment. As we drop the minimum investment, these numbers increase dramatically, which is why you can see the target for the customer acquisition cost, the target for investors, the target for investments per year, all increasing because it gets easier and easier as the number of investors grow and as the minimum investments come down. Our average transaction size is $2,000. We ultimately aiming for 100,000 transactions at $2,000 with an average fee of 5%, which would put us at $100 million in revenue. That's the most important three metrics we're looking at. The reinvestment rate you've already seen, and we want to consistently be growing that. And then the customer lifetime value is currently at $4,800. And I think this is a really important, number, because if you divide $4,800 by $251, and maybe Richard, if you could just point with your mouse to those two things, it's nearly a 20x return. So for every $251 we invest to get an investor, they are making the business over the lifetime of the business just short of $5,000. And this is why the metaphor is so important, because all of you opened a bank account at some point. I opened with Standard Bank when I was 14 years old. I'm 44 years old now. So that's 30 years and I'm still with Standard Bank. It's a very, very sticky product. When people get involved, once they start using it, they get their returns. And so it's hugely valuable for us to drop the minimum investments to get investors onto the platform because of the stickiness of the product. And those unit economics just prove what I'm saying. And that's where Willem, again, as I said, deserves the credit, because now you understand those unit economics, you can put fuel on that fire and you can scale that operating profit.
I suppose that's really what we're here about, is like growing those number of members, because as we bring on new members, we're going to be able to, like our customer acquisition cost compared to our lifetime value of customers. I mean, that ratio is incredible compared to most businesses. So as we really bring on new members, we should see, significant traction as you pointed out. And I suppose that's really at the funding round.
Yeah, Tim, I just want to kind of really reiterate and point this home, because if I buy something on Amazon or Take-A-Lot or something, and another website pops up down in a month's time, I might go there if it's cheaper. I mean, at the end of the day, all I've got to do is put my credit card details in and I can use a different service. If I've invested and I'm getting returns every quarter and it's going into my digital wallet, it's very similar to a bank account where it's so sticky to move. And as long as you continue to get quality deals and quality value from the platform and the partners that are on the platform, that membership base is very sticky and will only continue to grow. And that's where year on year, it's not 1 + 1, becoming 2. It's effectively 1 + 1 becoming 2, 2 + 2 becoming 4, 4 + 4 becoming 8, because it grows geometrically.
Yeah, no, definitely. I think maybe the one question that's probably on everybody's mind is like, why aren't other people doing this? How are we a little bit different? Huge opportunity in the market. Great idea in terms of making this more accessible. The whole product makes a lot of sense. Why don't we see more competitors in this space? And then how are you guys defensible? Because I know there are a few folks. How are you defensible compared to those competitors? So maybe if you can just talk us through that.
Well, the simple answer is, if you'd asked me 20 years ago, I'd say it's because they're not stupid enough. So what I mean by that is that it's taken 20 years to figure this out. And so what they've tended to do, and the platforms around the world, is that it's incredibly difficult to build a platform and to comply with local regulation, local banking, local regulation. To go internationally just adds another whole layer of complexity. And so what they've tended to do is they wanted to be the kind of the partner in America or the partner in England, and to help English people invest in English property or help American people invest in American property. However, with our background and having come from the emerging world, I'm originally from Zimbabwe. I learned at a very, very young age not to have all my eggs in one basket. So I, at the age of 22, bought my first international property and then started investing in London, and then Australia, and then America. And so what I basically, it was one of those things where you hear Richard Branson talk about it, where it was my own problem I wanted to solve. And then by doing that, there were so many other people that had the same problem, which is where we wanted to be able to diversify. But what I didn't want to do is have a structure in America, a structure in England, a structure in Australia, a structure in South Africa, a structure in Europe, with multiple different bank accounts and a huge amount of complexity. And by the way, there's people on this webinar that are feeling my pain, because that's what we've done, all of us, me included, in terms of setting up all these structures. So we had to work backwards, Tim. And one of the things we had to solve was international compliance. Along with international compliance was international wallets. Because if you are CrowdStreet, which is the biggest platform in America helping Americans invest in American property, none of us on this webinar can invest unless you're American. Because their platform, all that it does is link you with a partner, and the partner pays it directly into your American bank account. Now, unless you're an American citizen with an American structure and or an American bank account, you cannot participate. So we had to solve that problem. So we digitally integrated into a digital wallet solution with Lemonway. They're the biggest in Europe. They're backed by European regulation and the top 5 banks. And this becomes, from a defensibility perspective, it took us 18 months to figure out how to do that from both a compliance and a tech perspective. We're the only platform that is integrated with them in real estate outside of Europe and in the cross-border space. So why aren't others doing it? It's because it's difficult. The second reason that they're not doing it is that often the fintech players in the first world, England, Australia, America, Europe, tend to focus on their own markets, but they don't understand the massive, massive opportunity of the rising middle class and the need within emerging markets. If you take a South African, an Indian, a Chinese person, someone sitting in South America, they all have the same needs. They want wealth protection, which is about investing in first world assets. They want a plan B, and they want peace of mind. And traditionally, only the wealthiest of the wealthy could fly overseas and buy an apartment in London. But now in India, as an example, there's 300 million people coming into the middle class that can invest up to $250,000 a year. And they want access using technology. The same in China, the same in Africa. And so back to your question, Tim, it's a better understanding of the market and the needs, and then providing a solution for them to invest into the first world. And so I believe from a defensibility perspective, we could often give people, we could tell them what we're doing. We could give them the blueprint, but to actually do it is quite a lot more complex. It's not as simple as just building the tech, because you've got to have an understanding of the global complexity around compliance. You've got to have an understanding of global money movements. You've got to know how to go to countries and find quality partners. And most importantly, you have to understand the needs of the investors and what they're looking for.
Yeah, and I think that's so true. It's like great ideas take great execution. And it's one thing to think about an idea, but it's another thing to actually go and get it done. And I think that's what you guys have been able to do, is you've actually been able to get this in place so that folks from all these emerging markets can actually invest in first world properties. So that's pretty incredible. I'm going to switch over to Willem. We've worked together on a number of projects, Willem, and you have a strong framework for assessing businesses and thinking about picking winners. So I just wondered if you could talk to us a bit more about like exponential organizations, and then how you see or how you score maybe Global Wealth Group against that framework.
Sure. That's something that I can talk about for a long time. I am cognizant of the fact that we are a little bit tight for time this evening, so I'm going to exercise some discipline here. So first of all, Tim, I would just say the exponential opportunities are typically, when they manifest, the first successful mover in an industry or in a segment or in a vertical. It's not the first mover necessarily, it's the first successful mover will probably annex 60% of the market. The next mover will get 30% of the market, and then everyone else fights for the last 10%. And then they are typically acquired in those sort of fragment plays. So you really want to be first or second, and putting all the infrastructure in place and pulling together of this organization has taken a long period of time. But to Scott's point, it's a very compliant-driven arena, which we had to get right. Now we've got it right. Now we want to prove exponential growth. And so in Simple Capital, we look at exponential organizations, we look for them, and when we look for them, we regard how a company is structured, such as to be able to unlock this exponential growth and then hopefully be that first or second mover in a market. And this is work from Salim Ismail, who published a book, Exponential Organizations, where a lot of research had been done around the attributes of exponential organizations. In other words, what's the silver bullet? How do we get these identified? So there are typically 11 attributes. It starts off with the one at the top, which Richard found a slide for us. It's called MTP, or a massive transformative purpose. This is not your marketing slogan. This is not something that you're sticking to the glossies. This is your reason for existence. This is what will pull the team in the same northern-facing direction. This is what will unify the crowd, the community, and the evangelists around your product. And this is also the thing that when it isn't there, will pull the company apart when we add torque and momentum through the injection of capital and growth hormones, as we like to joke internally, to an organization. Interestingly, for those that haven't read the book, we couldn't find in the research done in North America, Canada, Europe, and in the African countries where I was involved, we couldn't find a single exponential performing organization that didn't have an MTP. And so actually now, when we start the investigation around a company, we say, can you articulate the MTP? Because if you can't, as a founder or an employee, you might have dissonance down the track, which will pull the organization apart. So without MTP, no go. And then some of these other attributes may or may not be appropriate, given your industry, given your particular line of business or your operating model. And then we actually went through an exercise where we scored the Global Wealth Group on each of these out of 10. So we said, okay, if you have an MTP, then you have a chance. Do they have one? Scott's articulated that mission for us very succinctly this evening. So yes, we got that. Then out of these other remaining 10, how do we fare? And I thought we fared pretty damn well. So we're not scoring 10 out of 10 for all of them, but we have got all the building blocks in place. And a part of my role, assuming the leadership of the board, is to help the company now formulate strategy and structure to be able to unlock these building blocks. And now when we add funding, the purpose of the call tonight, we've got a fighting chance at being number one or number two as an exponential organization. Tim, that's me trying to do a nutshell.
Thanks so much, Willem. I think the one last question I had for you, because you answered my one about purpose while you were chatting through that, is just about sort of investability in the Global Wealth Group. I know there have been a couple of changes, and you've obviously spoken about this. So you've spoken about how you score it against that framework now. But I mean, you're obviously also an investor. How are you thinking about that now, given some of the changes that have occurred and what's taken place in the last 12 months?
Sure, Tim. So I'm getting a whiff of a rumor that like when I'm called Renaissance Man, and that's because Scott and I and the current board have kicked off a Renaissance process within the organization. The Global Wealth Group on the S curve has gone through the flat first leg. It's put the business together. It's built the compliance. It's built the systems. It's built the team. and it's spent its time creating and engineering an opportunity for scalable unit economics. We are now entering the upward part of that curve, where we're hoping to supercharge our operations through growth again, hence the need for a capital injection to make this thing really get off the ground now. And so from an investability perspective, there's always a little bit of chaos in that transition from the team that took the active leadership around the flat part of the S, and a different team and or structure, normally both, that will now ensue to help with that liftoff and total scalability unlocking. And we're on the precipice of this. And the wonderful thing that I would want to share as a newcomer to the board with all of our audience this evening is that the team is totally aware of this need of a renaissance as regards our operations, how we structure and organize internally, and how we put metrics in place to make sure that we're now taking step for step for step, enabling us to quantum leap as we go. There's been zero resistance internally. It's only been met with open arms and an acceptance of this type of philosophy. And in fact, we've had people say voluntarily, please can I be off the board so that I can go and focus on the actual ops and bring in some other board members that have got expertise in this scalability season of the Global Wealth Group. So I wouldn't be involved if I wasn't excited and invested personally. I think if we get this right, this is going to be one for the books. And all the stars are aligning. Our time is now. How we choose to react and lead in this period of time will determine whether or not we are number one or two. And I've got my sights set firmly, together with the team, on making sure that we're number one.
Great. Thanks, Willem. And I think you mentioned there very importantly, like team. So Scott, I'm going to just flick back to you and just ask you to maybe give us a little bit of details just on who exactly is on the team. Obviously, super important when you're investing in a business like this to understand the team. And I'm going to ask our audience if there are questions to potentially start popping them in the Q&A box, and then we'll start answering them once we get through this and one more question that I have for Scott.
Cool. So what we're seeing at the moment is kind of the core team. If you look there, you've got myself and Willem, who you already understand. In the top right, you've got Tim Hilton, who effectively took his own company to listing about 15 years ago. He then took a bit of a break and subsequently has been helping high growth tech companies and effectively grow from a CFO perspective. As he says, he likes to put a steady hand on the tiller, which is when venture capitalists come on board into companies and he comes on board to help through this. So it's exactly what Willem's talking about in this kind of scaling period. So he's joined the team 6 months ago, and actually as of Thursday, officially got voted onto the board, which is fantastic. Then below him, you've got Rian van der Pfeiffer. Rian's got over 20 years of experience within the asset management industry, highly respected in the compliance space. He's our chief investment officer. He runs our due diligence process and our compliance, and actually helps us with not only local compliance, but global compliance and dealing with our digital wallet providers. Then we've got Lyndon Booth. He's our product owner and product, effectively from a product perspective, he's the person that, as I like to say, marries together the technology and the commercial realities. He understands how the tech is built and he understands the commercial realities, and effectively has been, one of the brains, along with Gavin, behind building the product that is so scalable. And, I can't say this enough, Tim. We've currently got, Wealth Migrate. A lot of people know Wealth Migrate as the platform, but we've actually got 16 other live marketplaces now. That's 17 marketplaces running off the same infrastructure. Gavin Rousseau is our COO, and he basically is the one that needs the credit for building the entire tech team from scratch. One of the biggest mistakes I made previously was trying to outsource our tech. And from the middle of 18, he started to build our own tech team. And although it's a small team, they've punched way above their weight in what they've created. And with his experience coming from Aprio, which was one of the biggest, clearing houses in New York with the banks, doing literally billions and trillions of dollars, he really was the one with his team to build us the book building infrastructure that enabled us to move not only from property in the primary market, but to all alternative assets. Gabriella Faris is American, and she comes from the EdTech space. She had a very successful career in 2U. And when 2U came out and bought Get Smarter, she actually came out to manage that acquisition. And she's now joined our team to head up our marketplaces and effectively the entire sales and distribution strategy of our internal marketplaces, Wealth Migrate and Private Wealth Global. Aubrey Turner comes from the digital marketing background. He's our CMO. Again, he came from the Get Smarter. And if you don't know, they're one of the biggest EdTech platforms in Africa that was acquired by 2U, which is $1 billion company out of America. And so again, comes from that digital background. And then Lee effectively runs our community. She's the head of the community. She runs all our communication. She also runs an integration role within our team. She's an ex-legal, has an ex-lawyer legal background. But most importantly, Lee, as I tend to say, is the one that holds us all to account and makes sure that things get done in a timely manner, but that we also have a good community and culture. Because for us, one of the things that I've learned from one of the most, all of the successful teams around the world, it's all about building a world-class culture. And it's something that Lee and I specifically spend a lot of our time on. How can we get great people and build a great culture? And unfortunately, you can have people that are really good at their job, but can be very divisive to a culture. And so we really worked hard on building a great culture.
Great. Thanks, Scott. I think, yeah, just encourage anyone who's got any questions, just pop them in the box there. I think we've got one so far, so we'll jump to that in a second. But just before we do that, I'm just going to ask Blake to just go through the deal. So just talk to us a little bit about the opportunity on offer today, and the details there. So Blake, over to you.
Sure, thanks, Tim. So we've got a curated list of investors tonight. We've heard the story, we've heard the vision, we've heard what's been achieved to date and where the business is going. So how do you participate in the journey as an investor? So what's on offer in terms of the instrument is a convertible debt note. The amount to be raised, $750,000 with a minimum investment of $25,000. It is a cash paying interest convertible debt note. Interest paid quarterly, depending on the size of investment, the interest ranges from 7 to 10%, and it's a 5-year maturity. Very high level use of proceeds, 50% going into distribution to increase investor numbers, 30% into additional technology initiatives, and 20% into profitability initiatives. Just in terms of next steps, Rich, if you go over to the next slide. So we would ask interested investors to submit the expression of interest by scanning this QR code, and that will take you to a Google form. We will then give interested investors access to a data room. We'll also give interested investors access to the team for one-on-one meetings, and then we'll look to close out the deal with signing the convertible loan note agreements and pay away. Over to you, Tim.
Great, thanks, Blake. Yeah, I think very important tonight's about investing in the platform itself. Obviously, there are opportunities to invest in assets on the platform over time, but very rarely will you actually get the opportunity to invest in the platform that's putting all the deals together. So that's what tonight's about, and that's the opportunity on offer. I see most of our Q&A has been answered, so I'm just going to ask one or two more questions while we wait for any other questions that might come from the audience. But hopefully we've done a good job of explaining the opportunity without any questions forthcoming. So Scott, maybe just one from me. What are the kind of exciting projects that you guys are working on at the moment? And once this funding round closes, excited to kind of really put the gas on and turn things up in terms of getting things done, and potentially projects that you're working on now, as well as projects on the horizon that you'll be working on in the future.
So the first one there's four that I want to talk about, but the first one is that our ZAR, our South African wallets, are going live in the next 2 weeks. Now, South Africa is not the biggest country in the world, and so, but what it is that we've already got supply, we've already got demand, we've got a huge bunch of partners, channel partners, and supply partners that are wanting to come online. And what we're basically doing there is we're proving the geographic model. So in the same way, if you take the franchise of a McDonald's, they had to prove it once and then they replicated it over and over and over again. So the ZAR wallets going live in South Africa are very, very exciting. Once that goes live, we're in the process of getting India set up. India will take longer, and our partner Ish is actually online tonight. He's the guy that got us introduced to Magic Bricks, etc. That's going to take longer, but we're going to take the learnings from South Africa with the intention of rolling out a similar infrastructure in time in India. Now, India is the biggest market right now. The last 10 unicorns that have come out of the world, 4 of them have come out of India. A lot of the money has shifted from China to India for a whole bunch of geopolitical reasons, but also because of the growth of the Indian middle class. What I'm excited about, if I take India as an example, which is point number 2. So point number 1 is the South African wallets. Point number 2 is Wealth India, is that there's 300 million people there in the middle class. Like I said to you, they can invest $250,000 a year overseas, and we can tap into them. But the best part is when we went to China, it was so difficult to get into China because they speak Mandarin. So every single thing had to be changed. All our FAQs, our videos, everything, due diligence, everything. Whereas in India, the target market we're going after speak English. So the distribution becomes a lot easier. The third for me is the growth that's with the Sharia compliant space. We've got a large partner with a very large distribution. And we're in the process of actually signing that agreement with them. And we're looking to bring that on in the next quarter itself. And then the fourth one, Tim, which you mentioned what we will do from a growth capital perspective, but one of them is in the distribution space under our B2B and what we call Wealth Point. There's such a significant opportunity to go out to the big brands out there and to provide them with a digital solution. And so we've got a number that we're talking to. We've onboarded 8 this month alone. And every single business that we onboard increases our distribution, and yet it's all going down the same funnel. So it's all throughput. And so really when it comes to business, that is not done through kind of digital marketing. That's done through human connection. And we need more quality humans that can speak at an institutional level, business to business, and and we need to go and find those people and get out there to just keep growing that distribution. So I'd say there's four things that I'm extremely excited about, 3 on the business to consumer side, and 1 is on the business to business side.
Right, thanks, Scott. Richard has put the link to the form into the chat. So you can either scan this QR code or you can just click the link in the chat if you'd like to express interest in investing in the platform. As we said earlier, this is very much this opportunity doesn't come around that often. And so we'd really encourage you to at least, go forward and find out a little bit more if you're interested. I'll just go to Scott and Willem for final thoughts and comments, and then we'll close out. I know we're a couple of minutes after time, but hopefully no one's dinner's gone cold just yet. So Scott, over to you, and then Willem, I'll just ask for closing comments, and then we'll close out unless there are any final questions.
I want to reiterate what Willem said. I've been an entrepreneur since I was 25 years old. I don't speak corporate. I don't speak institutional. I've never run or been part of an institutional type board. And so we've really built this business, on an oil rag, scrapping and figuring out how to do stuff and looking at problems and solving them, coming up with solutions. What we're doing now and where the business is it's evolved dramatically through that scrappy period. And it's right the way through the process. Willem has brought in a level of professionalism at the board and is bringing that in. Then at the leadership team, we've brought in experts in their areas to really be able to focus on those different areas, right through to how are we going to go out and build distribution with quality partners. And so for me, what's exciting, Tim, is that having watched the evolution of the business, it's truly exciting to watch as the business goes to the next level. And the invitation for people, whether you're a current shareholder like me or a new shareholder, is to join that like-minded community. We're a community-based company, and I tend to say there's 3 reasons why people become shareholders. 1 is they want to make a financial return. They want to be involved in a high-growth company. 2 is they want to be part of a like-minded global community. We've now got members in 42 countries, shareholders in 42 countries, and it's all about becoming a global citizen together. And 3rd is you want to have a purposeful impact on the planet. And I always say, it's not for everybody. Some people that doesn't resonate with, but for those that do resonate, we invite you to be part of our journey. And for those that have been on our journey, we're very grateful, but we're just getting started.
Yeah, Scott, I want to tag on to that last statement. I think, I'm busy building a house right now. And what I've learned is that how long it takes to complete the project is budgeted time times 2 times pi. So it always inevitably seems to go longer because of all the left field stuff that we have to deal with in fielding. And building a business is no different. And so we've had extremely patient and committed community of shareholders up to this point. We thank you for that support and that patience that you've exerted. We are now at the cusp of liftoff. Structures have been put in place, discipline has been brought into the game, professionalizing our startup into an older startup era. We're getting into that season now. And the opportunity truly is a global digitized one. And we really hope that you would join us on this journey of exponential exploration and expansion. I think it's going to be one hell of a ride, and I'm excited to go through it with this team and with this community.
Great, thank you, Willem and Scott. I think just to call out one more time, obviously the form link is in the chats. You can also reach out to any of the team members if you have any questions. Feel free to reach out to myself as well. But with that, I think we're going to bid you good night. And thank you so much for your time and listening. We really appreciate it. And we're excited to go on this journey with you as fellow shareholders. Thank you.